So I've been trading 7 years, and my goal for you by the end of this video is to have enough knowledge where you can look at a chart and understand that you would want to have gone short right around here, okay? And this is something I've learned from market structure, and you'll be able to identify exactly when the trend changes by simply looking at a chart, not having a million tools, not having a million indicators, and really having a good understanding of how the market moves and how to identify when to go short and when to go long. I'm not going to show you how to catch tops and short up here. I'm not going to show you how to catch bottoms and buy down here, but I will show you how to catch a very value of trend change and then understand how to find an entry and a trade around that and apply it to yourself so you can make money trading, okay? Now, the cool thing about this is there's actually an indicator you can steal for free on TradingView called pivots high low, okay? So you simply just go in here, you type in pivots high low, pivot points high low, it's right here. I haven't changed the settings on it. I think it's just 10, 10 all around. I changed the colors a little bit. Now, this can get a little crazy, a little complicated, but this is like step one of understanding trend is you got to understand your pivot points. You got to understand where your highs and where your lows are. Now, is this indicator a 10 out of 10, 100% perfect job of where your highs and lows and you want to look at them are? No, okay? Sometimes you got to go to a 5-minute. Sometimes you got to change your time frame up a little bit to get a good understanding of where your actual real highs and real lows are, and I'll show you how to do that in this video. But for now, it's a good start, okay? So you can put this on. Now, the basics of trend, understanding market structure, and how to understand a trend change is very, very simple, okay? You can use this indicator. I'm going to take it off for now because it's a lot. You can kind of just really just look at the chart and identify what price is doing. So, for example, again, this is something you can practice, like, apply today and start really learning and educating yourself on the chart, right? So for example, we're going to start down here, okay? Actually, we're just going to start up here. Screw it, okay? Price opens here. We come down to this low here. We come up to a high. Again, you just use the arrow tool. You just draw what price is doing. We come down to this low. We come all the way up to this high. Come back down to this low. Come up to this high. And we come down to this low, this high, this low, okay? That's essentially what price is doing. And to make this a bit easier, I'm just going to extend that out. I'm just going to clean it up a little bit so it's easier to read, right? So we're just going to go like this, like this, like that, like that, like that. Okay, so basically the same exact chart, the same kind of pivots. It just made it a little bit easier. But that's essentially what's happening on this chart right here. Now, everyone always says like, you know, head and shoulders are the reversal pattern, right? If I have I don't even know how to do this drawing tool. I rarely use the drawing on here. The brush, right? We have this, two shoulders, and then the head. I don't look at it like that, okay? You can't look at charts like that because they're not accurate, right? Because then you start looking at, oh, well, it's the neckline. I want to, you know, get short when price breaks. No, that's not how you want to trade, okay? You want to look at market structure and understand this. Now, if we are looking at this piece of price action here, what do we understand? Again, basics. Price is going from a high to a low, to a higher high, to a higher low. That's all it is, right? At the end of the day, that's an uptrend, okay? High, low, high, low, high, low. And we understand that because we're making higher highs and higher lows. And on a downturn, we're making lower lows and lower highs. Now, when we actually shift from making higher highs and higher lows to lower lows and lower highs, is that change in trend, all right? Now, in this context, we wouldn't have known about that change in trend till right about here. Okay, right about this point, which again, if you understand, is where I pointed out right about here, this point here. Okay, that's when you would have been able to identify to go ahead and get short, look for a short opportunity, and take advantage of this move down to scalp. Okay, now how do we know this? Well, again, pivots high, pivots low. Okay, this is our first high. Okay, this is going to be, let's go ahead and do this, another high. We can actually call this a higher high. Right? And then this is our low, and this is our higher low. Now, we have an uptrend forming, and at this point, what does price fail to do here? Okay, which would essentially be right here. Price fails to make a higher high, right? Now, when price fails to make a higher high, we're going to call this a lower high, okay? When this happens, at this point in time, you got to look at it in time, okay? So let me just actually draw a little box. Basically, right after that happens, when the next like 5 minutes of time, whatever time frame you're looking at, right? You cannot turn bearish yet, okay? You cannot, absolutely not turn bearish. All right? Even if price breaks this low, you cannot turn bearish. And you may say, well, Jordan, that's actually a lower low, right? Lower high, lower low. We have the lower low right here, okay? And the actual reason you can't turn bearish on that yet is because this is actually not a strong low. This low did not take out this high. When I mean take out, this, price did not go back above this high, right? So let me break this down for you a little bit better. Okay, we have an uptrend, and you understand who's in control here. Okay, so in this area of time, buyers are in control. How do we know buyers are in control? Because we are continuously taking out highs, right? You got to act like those pivots are highs and lows are buyers and sellers, and kind of like their own sense, right? So we have, let's say, we have sellers here. We have more sellers here. And price is continuously showing you that the buyers down here, so we're going to make this different color, right? The buyers, we'll make it green, are taking price above the sellers, right? That's a classic uptrend. That's when price is going from low to high and high to low. That's all price is doing, right? We're taking out, or by taking out, I say we are going above the sellers. So the buyers here are going above the sellers. Now that is telling us that the bulls are in control. The buyers are in control. They have the power at this moment in time. Now when price fails, or I guess reverses, when price goes back below this, that shows a shift in trend. We now know that the sellers who are selling here, okay, the sellers who are selling here are stronger than the buyers who are buying here, right? Because if price came down and these buyers were stronger, they would have held price, right? Price would have just came back down. It would have bounced off and kept going up, or at least retested this area. But because price broke this low, we now know we have that shift in trend, that the sellers were not strong here, the sellers were not strong here, but the sellers were strong at this price here. Why is that? Could be a time thing, could also be a price thing, right? Maybe sellers were just weak here, but they thought sellers were really good, deals to short all the way up here. So they decided to go in. And again, that is confirmed by the fact that price was able to go below the buyers, or take out the buyers, right? Essentially make that. So this is our sign now that the sellers here are stronger than the buyers down here. That's when we can go ahead and look for a reversal. Now where that differs is if we get a move that looks like this. Let me just do this. Okay. Let me do this actually. This is where things get a little complicated. Like that. That makes it easy. Okay. Now, here's where things get interesting. Same thing, okay? We have our sellers here. They're weak, right? We have more sellers here. They're weak. Why are they weak? Because the buyers down here are able to take price above it, right? So these buyers are strong, right? These guys are strong buyers right here. Make that green. So these are strong buyers. They're taking price above the high, right? Now, when price comes back down, again, we have sellers here. We have buyers here. We're expecting price to go back up. Again, now this is just another time frame different thing, right? Because when price is going from this high down to this low, if you zoom in on a smaller time frame, you'll see that we're actually doing a mini downtrend like this, right? Same thing with here, we're doing a mini downtrend, right? Those are just things that you don't see on the chart. But you can understand that and use that to your advantage. So when price is going down like this, you may see this and you say, oh, well, we had, whoa, where's my, there we go. You could say, well, we had buyers down here. We had sellers right here, and these sellers took out the buyers here. So aren't we bearish, right? You say, oh, the sellers here are stronger than the buyers here, so now I turn bearish, which is what you don't want to do, because you turn bearish right here, and the price just goes all the way up higher, then you're going to end up losing money. But what's understanding importance is time frame and relative, right? So this is our actual, we call that a strong low. Okay, so that's a little key term you can understand, a strong low. Okay, I actually have a little indicator for it, strong low. Why is that a strong low? Because this was the last low that was able to actually take out a high or a strong high. This low here was not able to bring price above this high. So this is what you would call a weak low. Okay, this is actually a weak low right here. All right? I don't know if I have one. Let's do a liquidity right there. Weak lows can also be liquidity at the same time. Okay, it's essentially the same thing. Whenever you hear liquidity, think weak low, right? It's all the same thing. So because this low failed to take out this high, this is irrelevant. If price breaks through this, it doesn't matter. What matters is a strong low, right? And this was the last low that was able to bring price above the sellers. And this is, I guess, you could call it a strong, it's technically not a strong high. because we haven't taken out this low, but you can call it like a medium high if you want, right? This is a high that is formed that is looking to get taken out. And the reason for that is because we're in an uptrend, right? We're still in an uptrend, making high, low, mini high, and we come back down. So we take this liquidity. This is what we call a bear trap. This is something we can get into in the future, right? So this traps a lot of people who are looking to go short because people see a downtrend form. Again, if you're only looking at this price of action here, you're going to see a downtrend. You're going to see a high, a high, and a lower low, right? That's what a downtrend is. Lower low, lower high. Lower low, lower high, another lower low. Confirmed downtrend. But that's actually in a higher time frame uptrend. We're actually coming down to a, you could call this a demand zone, or depending on what the price action is, an actual move higher. So price ends up going back up at this area. So this is a bear trap. Price comes down, we take liquidity, right? We still haven't broke this low, then it goes higher. Now, if price were to break this low, come down here, then we could look for pullback to then go short, because now we have confirmed that this high was able to, or the sellers here were strong enough to take out the buyers down here. And that is what causes a reversal. And it's as simple as that. Now, this is all perpetuated on different charts, right? So I can zoom out a 15-minute chart and SPY. At the time I'm making this, you can see we have a pretty good, solid-looking uptrend here, okay? Now, a beautiful example of this, it's going to be like this, right? So again, I can even put on the pivot tie low. This was not great. I would say it's missing a little pivot here and right here. Other than that, it works pretty well, okay? You can kind of see where are the pivots, right? So same thing. I'm just going to draw this out. We have our high, low, high, low, high, low, high, low, and then we continue up from there, okay? That's all this is doing right here. Beautiful. Same thing I saw, okay? We have our low, our high, our low, our high. Price comes down. Now, here's where things get interesting, right? Because price technically did go above this high here. This is where market structure plays a key role in understanding breakage structures versus understanding stop hunts, all right? Price did go above this high here, but we didn't actually break structure, okay? We technically stop hunted it, okay? So you need, for price to, again, break above a high or break above a low, to actually break structure of a higher low, it needs to do it with confidence. And confidence, it can mean a few things. It can mean acceptance, price, time, volume. But it can't be a stop hunt. Essentially the opposite of a stop hunt is what you want, right? So if we are in an uptrend, let me go ahead and reframe this. We're in an uptrend that looks like this, okay? Price comes up. We just barely break above this high. And we immediately come back down. This does not mean anything, okay? Oh, sorry, this low does not mean anything. Because again, you got to understand, the buyers who were buying down here weren't actually able to take price, quote, above this high here, right? They technically did, but they weren't able to break structure of this high. They were able to just stop on it, right? And the difference between a break a structure and a stop hunt is really simple. Stop hunt is when price just wicks above it, breaks above it, and immediately dumps. Break a structure is when we go above it, we continue to go above it, or we spend a lot of time and price above it. It could be a candle close. Again, it depends what time frame you're looking at. But that's essentially the difference between the two. So if we're looking at this area here, price ends up breaking this high, or price doesn't break structure of this high, right? The low, the buyers down here were not strong enough to break structure of this high up here, right? All we did was kind of just take it out, immediately dump. So that shows us that this low is not strong. This is just liquidity. So what does price end up doing? We take liquidity, and then we keep going higher. And again, this is the bear trap, right? A lot of people are going to be shorting this area because they now see a shift in trend. They say trend is going to go down now because we broke this low. But that's not what's happening. Because this is the key low. This is your strong low right down here. Why is that your strong low? That was the last low that was able to take out the most recent high, right? We broke structure of this high. See the difference between this one and this one? We broke structure here. We didn't break structure here. How do we know that? Well, we came up. We spent a lot of candles above it. We kept going way above it, right? It's an obvious break of structure. Here, we didn't. We had like one 15-minute candle, just gapped up. We immediately went down, stop hunted everyone who was short here, and we came back down. So we kind of have this like double stop hunt scenario, right? Where price goes up, we stop hunt the highs here. We go down, we stop hunt the lows here, right? We stop everyone out, and then we keep going higher. And that's the bear trap a lot of people get caught in. Seeing how we do this, we come back down, we go back higher, right? And then we end up keep going with this uptrend here. And we keep repeating, right? High, low, high, low, and we'll see what happens after that. But you get the idea. Now, all of this is in relative to time frame and what time frames you're looking at, right? If I start going to a daily chart on SPY, you'll see a couple of different things, right? Because again, let's say, this is the high you're looking at. We have our low, high, low, high. Whoa, price breaks it. Then we start seeing a higher high, then we see a higher low. Wouldn't you say this is a reversal, Jordan? Look, we have our low here, right? We break it. The sellers who are here are stronger than the buyers here. We see that reversal. This would have been a good short. We see that head and shoulders, all that stuff. But we come down, and we end up ripping back higher, right? And the reason for that is because higher time frame always wins, right? S&P 500 is in an uptrend, at least by the time I'm watching this, right? It's in an uptrend, right? So this is just a higher time frame dip of this overall trend, right? We have this high. We haven't had a pullback in a while. We came back, pulled back. Same thing here, pulled back. This is kind of the pivots we're working with. And now, since we've broken structure of this high here, this now becomes a strong low. Okay, let me get rid of all this stuff. This now becomes a strong low here. Because this was the last low that was formed that took out this high here. It wouldn't be here, right? Because this low didn't take out this high yet. We got close to it, but we didn't quite do that. So what does that mean? That means price can come back down, right? Let me actually redraw this. Price can come back down, take out all this liquidity here, and then continue to go higher, right? Price can come down, take it out, and then continue to be higher, continue to be bullish, even though we get below this low. And a lot of you guys probably trade supply demand. Maybe you don't. Order blocks, whatever you want to call it. I trade supply and demand, right? This is a beautiful demand zone looking right here. Probably looks better on the weekly. Maybe not. 3 hour, 4 hour zone. Like, looks really good. Solid, right? Now, does not mean I'm not going to not look to buy at the zone, right? Again, I want to look for that smaller time frame confirmation. I want to see price come down, form an uptrend, higher highs and higher lows, then look to get long somewhere in that move in the future. But price can break this demand zone, break this low, and I can still be bullish. And the reason for that is simply because we're still in a higher time frame uptrend. This is a strong low that took out the buyers here, and understanding who's in control is going to be really key. Okay. Now, I can do this across any single stock you want me to look at. Okay, it doesn't matter. We can go to Shopify too. Okay, we go to Shopify. Now, Shopify for a while was in a pretty clear uptrend. We had a massive move lower. We're starting to form that uptrend back again. Okay, how do we know that? Well, let me go to a weekly. Again, this works on all different time frames, okay, so you don't have to worry about it. All right, so let's start from the bottom. We can actually probably put on the pivot, see if it looks good. It's missing. Actually, no, I think it's pretty good. Yeah, it's missing a little bit, but you guys get the idea. Okay, so what does price do? We have our low. We're going to start with the way low when we reverse. We have a high. We have a low. We have a high. We have a low. We have a high. We can even draw on these kind of mini lows, this low, this high if I wanted to, but we're just going to go down to this low, this high, this low, this high, right? That's an uptrend. These are your major pivot points, okay? Until price breaks a low, you are still looking to buy. You're still in an uptrend. Price is not breaking this low, buyers in control. Price is not breaking this low, buyers in control. Price is not breaking this low, buyers are still in control. Okay? So even though, if I scroll down, and again, these are all these lows here, right? So it would be this low. It would be this low. That would break that high. We come back down. It would be this low. And then the next one would probably be this one. We're probably going to go up and break this high too, right? So even throughout all this, right, you see that we have this mini kind of uptrend here, and we break it. We see lower lows, lower high, lower low. Wait, Jordan, now I'm going to look for a lower high, and I'm going to look to get short again, right? No, you don't want to do that because we're in a higher time frame uptrend. Price is still in an uptrend higher time frame. That's why time frame is important. Again, and time frame doesn't mean daily, 4 hour, 1 hour, 30 minute. It means zooming out on the chart. That's all it is. Zooming out and zooming in. It's not like going through a million of these. This is just how you view the charts. When I say time frame, I mean zoom out. Okay, so you can see that's how you don't get caught in this trap, and that's why it's a bull. That's why it's a bear trap. That's why this works. Same, like again, this is what happens, right? We have our uptrend. Price now shifts into a downtrend. Okay, here. Why? Because we have a lower high, we have a lower low, another lower high, lower low. What does price do? Price ends up taking out all these equal lows right here. Boom. Any single person, not every, but a lot of people who bought in this area, when price dumps, they sell. then what happens? We haven't broke this low, so we're still in an uptrend. The buyers here are in control. Until a price breaks this low, you want to be bullish. That is a fact. You want to be bullish. You can buy anywhere in this area with your stop loss below this low, and you'll be fine in an uptrend. Same exact thing with here. I'll show you in a second. But that's exactly what happened, okay? Price came down. We broke this low. Stop went into everyone. Then we ended up going back higher. What happens again? Price zoomed higher, right? When does this become our strong low? Right here. When price is able to break structure of this high, we now know that this is our new strong low right here. Okay, I'll make that our most recent strong low. It still is, to this day, our most recent strong low. Okay? So, now, prices are strong low. We break this high here. Okay? So now we know the buyers down here are stronger than the sellers up here. So the buyers are still in control. Now, when this point goes on, what do we notice happens again? Another downtrend forms. We have a high, we have a low. We have a high, we have a low. High, low, high, low. That's a pretty clear downtrend. It's a pretty clear lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, right? Now, the reason I don't want to be looking to short this move is, again, this is our strong low. Buyers are in control. This is the last move that buyers are able to take out this high. So until price breaks this low, we are bullish, which means two things. One, if we're in an uptrend, we do not expect price to break strong lows, which means that's a very logical place to put a stop loss. Okay? So you want to put your stop loss below strong lows. Targets. Targets are very simple. In an uptrend, price continues and goes to break the most recent high. Right? Price goes, we break this high here. Price goes up, we break this high. Price goes up, we break this high. So, uptrend here, where would be the most recent high? Right here. This would be the last high we have. Now, was this high able to break the strong low? No. So this is what we call a weak high. Okay? This would be a weak high. So price wants to go to a weak high. Price does not want to go below a strong low. That's your stop loss. That's your target. Last thing you need is your entry. Your entry does not matter. Okay? Entry should be the last thing that matters. You want to figure out your stop losses. You want to figure out your targets first, because that's going to allow you to figure out the entry. Because the entry really just comes to what risk reward do you want, right? If you want a 5-to-1 risk reward, you simply just put your entry limit order here and you wait for price to get to it. And if it doesn't get to it, you miss out on the trade. That's fine. Maybe you want a 1-to-1 risk reward. You would have bought, somewhere down here, somewhere down here. Also would have been fine. Maybe you want 2-to-1 or 3-to-1. You would have bought down here. Now, this is when you start getting more complicated with, well, how do I know the right options? How long is this trade going to take? Do I get shares? All that kind of stuff. That's a whole different video on its own. But you guys get the idea is understanding market structure, understanding who's in control. Buyers long-term, and when I say long-term, I mean just zoomed out over the past 2-3 years, are in an uptrend. They are in control. Price in the medium term can be in a downtrend, right? You can be in a lower low, lower high, lower low, lower high, lower low. At this point here, you could look to essentially short for a move targeting here. It's the same thing, right? If I zoom in here, and again, on the smaller time frame, this is our most recent strong high, right? And this is our most recent weak low. If I know my target's going to be there, I know my stop loss is going to be there, I want to get a 1.6 risk reward, I would have got in. If I went for a 2 risk reward, I wouldn't have gotten entry. If I went for 1-to-1 or 1.5-to-1, I would have gotten entry around here, and I would have made money on this trade. You actually would have made a little bit more because we dipped down a bit. But you guys get the idea. I still don't want to be doing that. I don't want to be shorting this of an overall uptrend. Because again, if price is like this in an uptrend, okay, there's going to be mini downtrends within that uptrend. And you don't want to be shorting that. Can you? Yes, you can be shorting these dips here, but you got to be careful in understanding where your higher time frame strong lows and strong highs are, so you can play it in a way where you're not getting screwed over. And that's essentially what you want to do to make money with market structure. Okay, is understanding strong highs, strong lows, understanding bear traps and bull traps. And if you can do that, you'll be able to make money simply by looking at this market. And this works on all time frames, 1 minute, 5 minute, 15 minute. You can do this sort of scalping. I showed you even on SPX, like in the original video. Maybe if I go to QQQ, we just go on the 1 minute, see if there's anything here. Yeah, this one kind of started in a downtrend for most of the time. But you guys can even get the gist. Here, look at this, right? Let me just see. Yeah, look right here, okay? Let me go to 5 minute, actually. It'll be a little bit easier. Price opens here, we immediately dump, okay? We have a high, we have a low. We have a high. Oh, we don't make a lower low. Price goes up. You continue to say, oh, well, at this point in time, Now I want to turn bullish, right? We saw a quote change in trend, right? Price was able to break this high. The buyers here were stronger than the sellers here. But it doesn't matter because these sellers weren't able to take out the buyers down here. So this is just a weak high. This is liquidity. This is the trap. Okay? This is a trap. Price goes above this high to trap a bunch of people into buying, thinking it's bullish, and then they bring it back lower. You can see price comes down. We end up taking out all this liquidity down here. We have to kind of stop on it. And we kind of come back up, right? And then we don't know what's going to happen after that. But you guys can get the idea of essentially how that works, right? So by being able to understand stop hunts, break structures, strong highs, strong lows, understanding all this stuff, you can really understand and figure out how you want to play this, how to use market structure to your advantage so you can make money trading, all right? So I think I'm going to end it here. I know it's kind of a lot of random stuff. If you guys are interested in learning more about me or kind of what I do, I will leave a link in the description. You can check it out. It's like a free training video kind of going over my system for how I trade. But other than that, subscribe, leave a like, and I'll see you guys in the next video.